Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning, guys. Let's see what we have. Seems we had another move down, again way below the average. Well, that means it's more volatility than usual. What I want to say first, before I mark out the levels, is that for me, nothing has changed. The trade is still the same. I explained a few times that the invalidation for me is way below. I would even allow price to SFP the lows that we have on the left side. For me, the invalidation is way below, but that doesn't mean that I will hold it forever. So basically, if I see price break below that level, then there's usually a retest. On that retest, I can get out. Yes, it would be a losing trade, but it's nothing different from other trades if your risk management is in place. So I'm okay, let's say to lose 50K, while my invalidation would be somewhere below 90K. I'm mentally prepared for that. It wouldn't be the first time that I sit in a drawdown and win, or also sometimes lose. Both experiences are important to write down what was good about it, what was not so good, and what I could have done better. I can show you one example. As we had our previous all-time high and the drop, I had a long running from the range lows. So what happened afterwards? Price aggressively dropped, losing the range. That's where I had my short from while keeping the long running. As price moved lower, I had my other longs from lows, but also later from higher prices. In the end, I closed the long in profit, as my invalidation back in time was near 68K. You see, it's more of a mind game rather than the market is against me. So now we look at this situation here. We have a range and a support level, same as we had in the last range. If price breaks that and retests the level, I will hedge my long and then ride it down to wherever it needs to stop and reverse. Same was true in the previous situation. So if I'm prepared and have my risk management and I'm okay with losing some money if it really goes bad, then why should I not simply follow my plan? That's weakness in the mindset, and I worked a long time to make it strong. So, it might be unusual compared to how others trade, but that's how I trade. I also can tell you one thing, market makers don't have stop losses at all, at least not the ones who are not gambling. They sit the drawdown out no matter the time because we have assets or many that are always going up. It just needs time again. Simple as that. And all the other stuff with tight stop losses is just mind games for people to set them too tight. They also risk way more than they are okay to lose. Even if they say they're okay, they're not. But that's something everyone needs to handle on their own with their strategy. You can combine it or not. As I said, if I plan to risk 50K, and with that, my invalidation is below 90K, and other people also plan to lose 50K but use higher leverage or more size, then of course their invalidation is set way closer, and they'll potentially get stopped out more often. Same goes for lower time frames. For example, I'm pretty sure how this was traded by many traders. Either they longed the pump and price reversed, or they were always longing and shorting and closing too early, and in the end ended in a loss. Some maybe then caught the right direction and now made some profit, but on the way before, they lost 5 or 6 times. So in the end, they end up in break even, or if they're lucky, maybe some profit. But in most cases, it will be an overall negative P&L. Because they always risk the same, or maybe risk randomly, and it ends up getting bigger and bigger. For me, if I lose 1 time the amount I was risking, not 5 times. That's it. But now let's have a look at the levels. So I mark the average levels now, and then we look at the levels in the structure because we had a few breaks. But as I said, I'm still in this trade. I explained it a few times also yesterday in the video. This red here doesn't mean I'm wrong on the trade. It means this is the room I gave the trade, and I'm okay even with sweeps. And if it breaks down, then I take action. Maybe close it, or also open a hedge short and hold both. Okay, let's mark the levels. So based on the average, we can see that price can still go lower. And if it's within the average range, then it's still inside the support area, even if it sweeps the lows. that would just mean the day has higher volatility again. What I want to see is a close back inside the range. The averages will also update with time, but since it happens rarely, we sometimes see them get overshot when more volatility comes into play, just as usual. That's why they're called averages. Often they work perfectly, but of course they shift over time. Now on the average gain side, we have the daily order block that we had marked out before. That's our current daily range resistance and also a sign of strength level once it gets broken. For now, with the average loss, it's a potential resistance area, especially with the weekly open sitting right in this zone. Now on the weekly time frame, it wouldn't be preferred to see a close below the last swing low, but if that happens, then we have the weekly order block just below us as a level of interest. That was the last order block that broke market structure before a move to the upside. So this is basically an original structure point of interest, the last OB before a move up and structure break. So we can mark that out. And here we already see that the level we're at now is, so to say, just the doorway to that support level. That's why I say people with big pockets can fill this area as well. And my plan is to stay in the game while they're doing it. That's why my normal invalidation is way below that. But as mentioned, if we break this level, then I will consider hedging or scaling some out at break even or a small loss. We'll see once the time comes. For now, we are at support, and I don't front run the timing with calls for lower levels, because that would be emotions, not trading what I actually see right now. And that's what I try to avoid. On the monthly time frame, we can see higher highs and higher lows, so a price drop on the weekly could simply form a higher low on the monthly. By the way, in the educational video, I'll show you something about the monthly and higher time frame candles, along with some stats. What I can say for now is that there's around a 90% chance that we don't reach the previous monthly low this month. Still, a 10% chance remains that we do. And in that case, I would also look for an SFP there, which would align with the weekly order block level. Okay, let's check the structure on the daily time frame. We had a close below the swing low, which means we got a daily structure break, but not a full structure change. For a change in structure, we always need, first, a lower low, which we now have, then a lower high, and after that, another lower low. That's what defines a downtrend or a confirmed structure change. Same goes for other time frames. So now that the previous swing low is broken, we mark that as our new daily swing high, and that becomes the key level. What does that mean? Well, same as on lower time frames, if it's the bearish case, then price should form a lower high on the way back up. And in our case, that area would be the daily breaker, previous support turned resistance. If price breaks back above that, then a retest of the daily structure itself is likely, and that would mean a test of the daily swing high. The 1 hour and 4 hour swing highs are in the same zone and still in a downtrend, so we mark them out as well. They sit slightly above the average gain level and also inside our daily breaker, along with the weekly level. So that whole zone becomes key to watch for either rejection or signs of strength, like a proper reclaim. Keep in mind, these swing highs can shift. That happens if price starts to form a range here or grind down further and print a new low. In that case, the swing highs would shift lower. That's actually better for structure-based setups, because we won't have to wait for a big rally just to get an entry. And if we get a structure change to the downside, all these highs simply become take profit levels for day trades or specific strategies. The yearly fib time is coming really close, basically in 3 days. And overall, I like what I see so far. In previous videos, I already mentioned this area down here, which aligns nicely with our support level. About fib time in general, it often works like this. Price rises, hits the fib time, then reverses. or price drops, hits the fib time, and then reverses up. When price meets time, we usually see a reaction or even a reversal point. Same goes for the opposite. If we were moving down first, then rising into fib time, that would usually lead to a reversal down from there. Of course, it's not always exact. Sometimes it results in continuation instead of a full reversal. But again, if we're at support, I don't expect it to break unless it actually breaks. I don't front run the time, I just mark it, stay aware of it, and wait for confirmation. So that's what I mean by deviation. We have a range, price rises and sweeps the high, and now deviates back down. Once we're back inside the range and also back inside our daily breaker, then we're simply aiming for the mid-range again. But as I said, I allow price to do what it wants here, even sweeping more lows, because that's all within my own plan. I hope that all makes sense to you, but if not, feel free to ask, of course. Now looking at the cycle times, 4-hour, still in buy signal, same as before. 12-hour, also showing buy signal. Daily sits at 100K, so technically it would be possible to reach that level. But again, that would be jumping ahead and assuming everything will break. So how can I say we're going to 100K while we're sitting at support? Yes, it's possible, but I'm not aiming for it, at least not for now. Even if it happens, that would still be inside the weekly breaker level. As you can see, that's why my normal invalidation is way below. And yes, sometimes I'm wrong, rarely on bigger trades, but it happens. Still, it's better to be wrong once than to get stopped out 5 or 10 times with tight losses while risking too much on low time frames. With that said, I hope everything is clear. For day trades or scalps, it's better to wait for an SFP as explained because of the current downtrend. Of course, you can short resistance if you want. I personally don't short much, simply because I believe price will go higher overall. But I've shown you the resistance levels, so you're free to do what fits your own plan. I just can't update or comment on trades that I'm not doing myself. So when I'm long, I'll say that. And when I'm short, based on a strategy, I'll say that too. But if I'm not planning to short, then I don't care much even if we hit resistance. All right, guys, I'll wrap it up here. Wish you a nice day. And I'll keep working on the educational video. I know it's a bit slow, but it will come. Just takes a lot of time because I have to reread my own text, and it's like 1 hour, 30 minutes long. So every time I review it, it takes a while. Okay, see you guys.